Welcome back. We have lots of stocks to talk about and, of course, a market that's rollicking right now. So let's welcome Prakash Diwan on board to tell us how he's looking at the market. Prakash, hi, good morning and thanks for joining in. We're at the cusp of all-time highs and it's a big breakout here. So let me ask you about individual stocks. I wanted your thoughts on M&M because, the numbers came in last week. But in the conference call, the management was very confident that they can scale up further, both in the auto and the tractor businesses. And, in tractors, despite being at 41% market share, they said there is scope for further growth because of the upgraded Swaraj tractors, etc. At this price, how does the risk-reward look for M&M now?
Good morning, Surya. So I can understand why the management would have to sound very confident and, confidence within the people on the street for the simple reason that at this stage that M&M is, and it's been an outperformer for the last year and a half as compared to other peers. All three flanks that it operates on. So, for example, the SUV segment, the SUV portfolio, it's something that Maruti is challenging big time and then trying to build market share from where they were not present. You have the likes of Kia, and they will continue to kind of nibble on the toes and increase market share. On the electric portfolio, you've got Tata Motors getting its act together with many more price points and variants available now as compared to what M&M has been able to roll out. And of course, Escorts Kubota is a different animal and full rejuvenated entity that's willing to take on the fight head on. So, M&M has to have some sort of a strategy to counter all these three flanks. Unless it does that and then starts seeing, we start seeing incremental gains in each of these segments, it's going to be a stock that will always get questioned at current valuations. Now, not that it's expensive as compared with historic trend, but what happens is the sum of parts has still a huge component of other businesses when you buy the stock. So the auto segment is something which will need to kind of rev up. So I would believe you ask the right question: what the risk reward? Out here, I think it's a time correction or a consolidation phase that you are staring at. There could be some time before it starts getting a leg up on the reward side. So, and the risk would continue to be slightly higher till then, and that could go on to 2 quarters. So, yeah, I mean, it's in a precarious situation at the moment, but the management confidence definitely will help. And if they don't make any unforced errors, probably you'll sail.
Prakash, hi, good morning. Two names I want your thoughts on. Friday was such a kind of participatory day, right? I mean, so many stocks from the broader market doing so well. Really broadened out over the last many weeks. So coming on Z, Prakash, 7% higher on Friday. So much excitement between this 180 to 200 and then disappointment, then it comes down. What's your sense on Z here? And second, if you can comment on InfoEdge, which saw a very sharp move. IT hiring is still weak, but non-IT seems to be firing. Go on.
Yeah, thanks, Prashant. So we did miss you on Friday. There was a lot of action, stock-specific action. But, I think, let me take the InfoEdge question first. Because when the numbers came out, there seemed to be a bit of a disappointment that they've not seen growth come back. But what is very heartening, and that's what the market kind of belatedly reacted to, is the fact that the way they've been able to maintain margins from other verticals, apart from the IT vertical, is very encouraging. Now, look at what's happening to a market as well. IT is no more, the prima donna as a segment, which it was, let's say, about a year and a half back when we saw digitization make a solid comeback. But right now it's banking, it's allied services, the financials services sector. You've got manufacturing doing so well. So there are other sectors that have started contributing. And the more capex that you see will always be correlated to the kind of business that Naukri will continue to get. So I'm quite confident that they will be able to do well. And if IT starts contributing, you actually have a twin engine kind of a growth. So quite positive on it. In fact, that was the opportunity. The dip was the opportunity to buy into it. And on Z, Prashant, is very clear. There have been so many slips, and this was a distraction that came out of nowhere, and then it just people started assuming this would derail the process of integration with the merger with Sony. But it looks like now it's a defined time-bound thing which will have an event which will happen. but there could still be some hiccups along the way. So that's exactly why people don't want to take very long position from a medium term perspective, and it's fairly short term and then approach. But I think closer to the fructification of the merger is when the stock will start seeing a huge interest. At this point in time, it's just a little bit of a peripheral accumulation that most people have done because it was available at a lower level, and this order that came through from the NCLAT was something which kind of puts to rest that the process will take its normal course of further. So yeah, you'll have to give it time, as I said, on Friday.
Okay, all right, Prakash, thanks for that. Just request you to stay with us. We have requested